European markets are watching the results of a very close British election. The Deal's Jonathan Browdy joins us from London with that and more. Jonathan.
Yes, good morning, Jane. European markets are in retreat this morning. Britain is facing an inconclusive general election. Nobody knows what the outcome's going to be, which means uncertain times ahead, while pessimism continues to surround the outcome of talks on the Greek bailout next week. It's been much the same picture in Asia, as global markets seem to have taken to heart the old saying, sell in May and go away. TeleCity Group, a data center provider that hosts servers for the likes of Facebook and Google, said this morning it received a cash and paper proposal from US data center operator Equinix, offering about $3.5 billion in cash and shares for TeleCity, with about 54% in cash and the rest in its own paper. The move could prove bad news for Dutch operator Interxion. TeleCity agreed in March to buy its Dutch rival in an all-share merger that would have created a company worth about $4.5 billion. Mid-cap TeleCity is up about 18% this morning. The biggest faller on London's FTSE 100 index this morning was Britain's number 4 supermarket chain, WM Morrison. Morrison's is engaged in a vicious price war with the other big supermarkets as they battle for market share against German discounters Aldi and Lidl. Morrison's like-for-like sales, excluding fuel, dropped 2.9% in the 13 weeks to May the 3rd. Morrison's stock is down well over 6% this morning. Spanish oil company Repsol sank nearly 4%, despite reporting stronger than expected profits for the first quarter and apparently defying the fall in the price of oil. The company reported adjusted net profit up about 75% from a year ago. It attributed the gain to the strong performance of its refining and chemicals businesses and the strength of the dollar against the euro. Back to you in New York, Jane.
That was Jonathan Browdy with The Deal in London.